Hi, welcome to Market Insights with Voight Real Estate Services. Today we have Kyle Carruthers with us. Kyle, tell us a little bit about your practice and what your specialization is.
Yeah, I specialize in multifamily apartment buildings in North County, San Diego, as well as South Orange County, with a primary focus on the coastal assets west of the 5 freeway.
And what are you seeing out there currently?
Yeah, so at Voight, we don't specialize in single-family homes, but we do track that market, the residential market, especially in these smaller multifamily deals. Those trends do apply. So really the main thing everyone's seeing, looking at, and talking about is the recent increase in interest rates, which has an immediate impact on the market.
And currently, how are those interest rates affecting your practice?
Yeah, so again, speaking towards the residential market, we're seeing that market definitely takes the immediate impact. So we're seeing an increase in inventory and homes are sitting on the market. So the days of listing your home and on day one you get 10 offers and sell for $100,000 over asking price, those days seem to be gone. As that translates to the smaller multifamily market, we're not seeing quite as much of an impact quite yet. There's still a lot of cash out there. There's a lot of 1031 exchange buyers, which kind of keep the market afloat. But eventually, over time, in this current new environment with these increase in interest rates, we should see that market start to soften a little bit as cap rates need to get more in line with the current lending environment.
And is there still a lot of cash out there?
There is cash out there for sure. There are cash buyers who frankly have been on the sidelines for the last year or two, and they're kind of starting to come out of the woodworks, and I believe this is the time that they've been waiting for the last 2 years. So if you're a cash buyer, I think you should expect to see some opportunities in the marketplace.
And what do you see for the end of the year, over the next year? I mean, looks like we're gonna have at least another 100 basis points,
yep,
if not more.
Yep.
What's the future look like?
Yeah, so rates definitely are going to continue to go up slowly. They're not going down. Right now there's a disconnect between buyer and seller. Buyers' appetites really change overnight, and sellers' expectations take a little bit more time to adjust. So through some of these price reductions we're seeing, through some of these lower sale comps, I think eventually it's going to play out. It's going to take some time, but once the sellers get a little bit more in line with the new environment, I think the ball is going to get rolling through the end of the year. And I would just say in closing, in the coming days and weeks, if it is announced that we're in an actual recession, there's going to be a lot of negativity in the marketplace. The media, the headlines, everything you're going to be reading is going to be negative. I advise my clients not to look too much into the media. My team and I prefer to take more of a positive outlook into the marketplace, because the reality is whether the market's up, down, or sideways, there's always a way to get things done.
There's always opportunity.
Always opportunity.
All right. Thanks, Kyle.
Yep. Thanks for having me.